Good afternoon. My name is Courtney Richoux, and I'm in Finance 381 at Southeastern Louisiana University. And today I will be comparing three different companies and determining which one I would make a short-term loan to, which one I would make a long-term loan to, and which one I would purchase. The first company that I looked at was Hornbeck. Hornbeck is an offshore services company located out of Covington, Louisiana. The second company I looked at was Lamar. Lamar is an advertising company located out of Baton Rouge, Louisiana. And the third company I looked at was Biogen Inc. Biogen discovers, develops, manufactures, and delivers therapies for the treatment of neurodegenerative diseases, hematologic conditions, and autoimmune disorders. So when I asked the question, which company should I make a short-term loan to, I looked at two liquidity ratios. The two liquidity ratios that I looked at were the current ratio and the cash ratio. In 2013, Hornbeck had a current ratio of 6.10. In 2014, it was 4.60, and in 2015, 4.26. Their cash ratio in 2013 was 4.32, in 2014, 2.23, and in 2015, 3.04. Lamar's current ratio in 2013 was 1.15, in 2014 1.21, and in 2015 1.39. Their cash ratio in 2013 was 0.19, 0.12 in 2014, and 0.11 in 2015. Biogen's current ratio in 2013 was 1.18, in 2014 2.10, and in 2015 2.60. Their cash ratio in 2013 was 0.34, in 2014 0.54, and in 2015 0.51. So whenever I compared the current ratio and the cash ratio for Hornbeck, Lamar, and Biogen, I concluded that I would invest in Hornbeck Offshore Services with a short-term loan. This is because their high current ratio and high cash ratio tells me that they can pay short-term creditors. Because they have their current ratio and their cash ratio aren't too high, this shows me that they are also being efficient with cash and other short-term assets. Whereas Lamar and Biogen had fairly high current ratios, but low cash ratios. So then I asked the question, which company should I make a long-term loan to? For this question, I looked at the equity multiplier, the total debt ratio, the debt to equity ratio, and the times interest earned ratio. For Hornbeck, in 2013, their equity multiplier was 0.50. In 2014, it was 0.26, and in 2015, 0.28. Their total debt ratio in 2013 was 0.54, in 2014, 0.53, and in 2015, 0.53 again. Their debt-to-equity ratio in 2013 was 0.82, in 2014, 0.78, and in 2015, 0.74. Their times interest earned ratio in 2013 was 4.71, in 2014, 7.25, and in 2015, 3.74. Lamar's equity multiplier in 2013 was 0.07, in 2014, 0.09, and in 2015, 0.09 again. Their total debt ratio in 2013 was 0.74, in 2014 0.70, and in 2015 0.70 again. Their debt to equity ratio in 2013 was 2.02, in 2014 1.92, and in 2015 1.86. Their times interest earned ratio in 2013 was 3.48, in 2014 5.47, and in 2015 7.0. And then Biogen's equity multiplier in 2013 was 1.38, in 2014 1.35, and in 2015 2.11. Their total debt ratio in 2013 was 0.27, in 2014 0.24, and in 2015 0.52. Their debt to equity ratio in 2013 was 0.07, in 2014 0.05, and in 2015 1.42. Their times interest earned ratio in 2013 was 179.94, in 2014 274.24, and in 2015 80.63. So when I asked the question, which company would I consider investing in with a long-term loan, I considered how much debt they have and can they afford it. And when I compare these ratios for Hornbeck, Lamar, and Biogen, I concluded that I would invest in both Hornbeck and Biogen. This is because Biogen has the lowest total debt ratio, which is good because it determines how much debt they have. And for the debt to equity ratio, we want this number fairly low because we like debt but not too much of it. And Biogen had the lowest debt to equity ratio until 2015 when it did jump a little. But then between Lamar and Hornbeck, I also noticed that Hornbeck had a good debt to equity ratio. And then for the times interest earn ratio, we want this number as high as possible because it tells us if they can afford the debt. And Biogen definitely had the highest times interest earn ratio, and then Hornbeck had the next highest, and this tells me that they can easily afford their debt. And the equity multiplier just determines the company's financial leverage. I concluded that the risk that Biogen has when investing in them, I think that it would bring larger returns, which played into my decision. So then I also asked the question, which company should I buy? For this question, I looked at the price to earnings ratio, the return on equity ratio, the return on assets ratio, and the profit margin ratio. And then I broke up return on equity and multiplied profit margin times total asset turnover times equity multiplier. So for Hornbeck, their price to earnings ratio in 2013 was 22.67, in 2014 10.46, and in 2015 5.40. Their return on equity ratio was 0.05 in 2013, 0.06 in 2014, and then 0.05 in 2015 again. Their return on assets ratio was 0.10 in 2013, 0.23 in 2014, and 0.18 in 2015. Their profit margin ratio was 0.12 in 2013, 0.14 in 2014, and 0.14 again in 2015. And then when I broke up ROE, I noticed that their total asset turnover ratio was higher than the profit margin and equity multiplier, which is probably what drove ROE up. And for 2013, their total asset turnover ratio was 0.88. For 2014, it was 1.66, and 2015, 1.31. Lamar's price to earnings ratio in 2013 was 106.13, in 2014 18.87, and in 2015 22.54. Their return on equity ratio in 2013 was 0.01 and then 0.08 in both 2014 and 2015. Their return on assets ratio was 0.14 in 2013 and 0.93 in both 2014 and 2015. And then their profit margin in 2013 was 0.03, in 2014 0.20, and in 2015 0.19. And when looking at their total asset turnover ratio in 2013, it was 0.34, in 2014 0.39, and in 2015 0.40. And then Biogen's price to earnings ratio in 2013 was 35.97, in 2014 27.88, and in 2015 19.42. Their return on equity ratio was 0.22 in 2013, 0.27 in 2014, and 0.38 in 2015. Their return on assets ratio in 2013 was 0.16, in 2014 0.20, and in 2015 0.18. Their profit margin ratio in 2013 was 0.27, in 2014 0.30, and in 2015 0.38. And then when I broke up ROE, I got, for their total asset turnover ratio, I got 0.59 in 2013, 0.68 in 2014, and 0.48 in 2015. So when I compare these ratios to determine which company I would purchase, I concluded that I would purchase Biogen Inc. Their high price to earnings ratio tells me that they have significant growth opportunities. This ratio looks at the company's future relative to its past, and all 3 years Biogen's price to earnings ratio was significantly larger than the other two companies. I also looked at profitability ratios. I looked at profit margin, return on equity, and return on assets. When comparing these companies, I wanted to see which one had the highest profitability ratios, and Biogen's profitability ratios were higher than the other two companies. It's also important to see what the company is making given what I would be putting up. So it was important to see profit margin, especially, and return on equity and return on assets being high for Biogen. And then whenever I broke down ROE to see what was driving the money, I did see that all three companies had high total asset turnover ratios. So in conclusion, the company that I would consider investing in short-term with a short-term loan was Hornbeck. The companies that I would invest in with a long-term loan were Hornbeck and Biogen, and then if I purchased one company, it would be Biogen.